It's been 1 year since the long-awaited Bitcoin ETFs launched, but have the ETFs really delivered on what many anticipated to be one of the most bullish events for Bitcoin? Today, we're going to be looking at whether the Bitcoin ETFs have accomplished what they kind of set out to be, and where better to start than the ETF cumulative flows in BTC denomination chart we have here on BitcoinMagazinePro.com. So the Bitcoin ETFs launched on January 11th, 2024, so pretty much a year ago to the day. And what we can see is since then, they have accumulated over 1 million BTC. Now, this isn't in net inflows. We do have to take into account that GBTC, which was the existing derivative product that allowed sophisticated institutional investors some allocation to Bitcoin, has had substantial outflows of around 400,000 BTC. So the net inflows are probably close to around 540,000 Bitcoin, but that is still an astronomical amount of money. If we go to the USD denomination chart here, we can see that that is close to $40 billion. And again, excluding GBTC, it's far surpassing $60 billion that these major ETFs are now holding, which is kind of what we anticipated. I don't know if we anticipated it'd be this successful, but prior to the launch, everyone was incredibly bullish on what this may mean for the future of BTC. We can see in our video on the launch here that we were kind of anticipating this to be the floodgate opening to institutional inflows. And while that has happened, during that time, there has been some mixed opinions, I guess. We can see that lots of people called the ETF launch a disaster, if I just move here, because following the launch, we had a few days of downwards price action. And then, of course, we had a few months of choppy sideways consolidation. So maybe some people have been underwhelmed that this huge flood of tens of billions of dollars hasn't shot Bitcoin up to $200,000, $300,000, $400,000 plus. What we can see is on the launch date here, we did have pretty much an immediate, almost buy the rumor, sell the news type event where Bitcoin did retrace nearly 20%. But since then, we have massively rallied in price action. From the 11th, if I just zoom out here to current price action, we can see that Bitcoin has increased by around 120%, give or take. And to the all-time high, it's actually even higher, to around 130%. So pretty decent returns in under a year following the launch of the ETFs. But we kind of knew this was going to happen, but we didn't really have a good comparison of what could happen. The only real comparison we had was the gold ETFs and the price action following their launch. What we can see is everyone kind of looks at the fractal of when the gold ETF was approved in November 2004, and then looks at how astronomically the price rose following that. If I just go to the gold chart here, what we can see is, if I just zoom out on price action, following this Spider Gold Trust ETF launch, gold price rallied from around $45 all the way up to around $185. So pretty astronomical returns, but this was over multiple years. What we can see is, if I just pull there, about 300% return. So potentially 2.5 times what we've seen on Bitcoin. But again, this was between 2004 and 2011, about 7 years. What we can see, if we just zoom down here to look at the gold ETF from 1 year from launch, what we can see is it actually only returned about 9%. So Bitcoin has done considerably better than this return. Although one thing to keep in mind is, because Bitcoin is a 24/7 product, we can trade at any time of day, doesn't matter where you are in the world, what day of the week it is, if it's a trading holiday, etc. And of course, the Bitcoin ETFs are only traded during New York Stock Exchange hours, but we can trade at any time, and that is, of course, having an influence on the price action. So what we can see is Bitcoin's price actually has about 5.3 times more hours of the year where it can be traded. So maybe just looking at a year-on-year comparison isn't the best way to do this. So what I've done is overlay the year of price action we've had in BTC following that ETF launch, and extended that, multiplied it by 5.3 times to kind of compare it to gold following that ETF approval to see the price action comparison. And what we can see, if I just zoom out here, there has of course been some periods of disparities in this, but it's actually turned out to be incredibly similar in terms of its percentage gains following that period. So if I just zoom in here, what we can see is Bitcoin, of course, over that period, like we saw, has produced about 120% returns, but gold over that same period, extending it by 5.3 times to account for the increased trading hours, increased by around 125%. So incredibly similar, which is pretty interesting to see. And what we can see is, following that, if Bitcoin is to kind of follow this trend of post ETF approval price appreciation, if I just add this on here, then following that date, what we could see is Bitcoin potentially having an increase of around 83% from where we currently are. So if I go back to this chart here And then if I delete this, that would look something like this. So what I've done is just taken the price action of gold during this period, overlaid it onto the Bitcoin price action, compressed this 700 days during this period by 5.3 times, and then given the same 83% price appreciation. That might sound complicated, but it'll make sense once we see it. And if we overlay that fractal onto the current Bitcoin price action, it looks something like this. So from our current date, it would give us a peak in May 2025 with that 83% price appreciation. We should put Bitcoin at around $188,000 if we're to follow that gold ETF. But is this realistic? Well, one thing I found incredibly interesting is if we go onto this chart here, which is looking at the inflows in gold, in the gold ETF, sorry. All we can see is from the launch there, if I just go to 1 year following that date, so the 11/18/2005, what we can see is, if I just zoom out a bit so you can see, during that first year of the gold ETF launch, there was $3.45 billion of inflows. If we just go back to the Bitcoin chart here, we can see that we've had, currently as I film this, about $37.4 billion of inflows. So about 10 times more inflows into the Bitcoin ETFs compared to this first gold ETF. But what is incredibly interesting is looking at this fractal again from where they line up, kind of assuming Bitcoin moves about 5.3 times faster than gold does. What we can do is look at that date here, which is the 7th of October 2009. Then if I go to the 7th of October 2009, what we can see is that gold at this point also had $37.1 billion. So the amount of net inflows into these ETF products over that adjusted same time period is actually incredibly similar, which is really interesting to see. So it will be really curious to watch Bitcoin over the coming weeks and months to see if we can maybe replicate the performance of gold following its ETF approval. And another thing I just thought I'd quickly touch on is following this a few months post ETF approval, we actually made this video, which was an ETF data strategy that actually outperformed Bitcoin. And what this was doing is incredibly simply just looking at whether a day was net positive or net negative flows. So if we had Bitcoin ETFs inflows, so more USD or BTC coming into these ETFs, then we would buy BTC. And as soon as we had a day of outflows, we would sell BTC. Incredibly simple. If we just look here, what we can see is, just to really outline what we'd be doing, is if I just zoom in here, on this day, for example, we'd have bought BTC, we'd have held it, and then on this day where we had the first red bar, we'd have sold BTC. And I just thought, just for a little bit of fun, because we made this video in September 2024, so quite a few months ago now, I wondered if it still actually worked, if we were to still implement this type of strategy. So we can see it's a little messy, my sheets always are. But again, exactly the same. What we're doing is looking at these total flows here, which is in this column. And then if it's positive, we have an entry. As soon as it's negative, we have an exit. And then we can see the profit column here. If I just zoom in a little further, it might be a bit easier to see. So what we can see is the cumulative profit. And this is just really simply buying with 100% of your capital, selling 100% of the capital, and allowing that to compound. And then we have buy and hold as a comparison here. So if I just go down here, this is the ETF strategy chart, and this is the buy and hold chart. All the way down, we can see that following this ETF data strategy, you'd have returned from the launch, well, 130.73% gains. We started on 100%, so 130% excess, whereas buy and hold would have actually only been about 111% compared to the price when I made this, which price is slightly higher now, but it still would have outperformed by about 10%. Of course, isn't taking into account fees and funding and taxes, etc. But it is still incredibly interesting and cool to see that if we're actually following this institutional capital flows, there's a lot of useful information here, and I do think going forward we are going to see even more interest in these products. Even in just the last few days, we've had nearly $1 billion of institutional capital flowing into these ETF products, and this is only going to increase as more and more sophisticated institutional investors feel like they're missing the boat and pile into Bitcoin before it's too late. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your #1 source for Bitcoin analysis. So just to summarize, 1 year following the approval of the Bitcoin ETFs, one of the most anticipated bullish events in recent history, we can definitely say that these products have surpassed expectations. Following the approval, we had a little bit of negative price action. Everyone immediately said that this has been a failure, that hasn't worked, etc. But a year on, what we can see is near $40 billion of inflows and over 1 million BTC accumulated by these large ETFs, which is incredible. What we can see is that comparison with gold and accounting for the increased time frame that we see. The comparison's really interesting. The flows are very similar. The price action and returns are incredibly similar. So if we are to continue following that gold fractal to some extent, we could be in for an explosive few months for BTC, especially considering the macro environment, the new US president coming in and everything just generally looking incredibly positive for BTC. This is an incredibly bullish time to be in Bitcoin. More institutional investors are going to be flowing into Bitcoin. But it is one thing to take into account that even though the ETFs have accumulated over 1 million Bitcoin, and looking at MicroStrategy and other corporations that have accumulated hundreds of thousands of Bitcoin, this is still only a few percent of the total circulating supply. We have about 19.7 million Bitcoin in circulation currently. And while this is a huge amount of BTC, potentially rounding up the ETFs and corporations 2 million Bitcoin, that still leaves a huge amount, a vast majority of Bitcoin to be held by people like me and you. So we really do hold the cards here. We are really influencing the market. As much as anyone might say that Bitcoin is now controlled by the ETFs and the institutions, that certainly isn't the case. That's not going to be the case for a long period of time. So be rest assured that these aren't dictating what's happening in the market. Supply and demand economics are still what's controlling the Bitcoin price action. But ultimately, everything's looking good. If you like this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the Bitcoin ETFs in the comments below and on social media. Do you think they've been a success, or do you feel like you're potentially a little underwhelmed at the positive influence they've had on the Bitcoin price action? As I said, let me know. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.